spotlight on the stock of the day, and it really has to be a Wipro, a 5% surge that you're seeing on the counter. It's been a while since Wipro has had that kind of strong outperformance. It's cooled off from the highs of the day that it opened at, but nonetheless strong buying coming into this one. And last couple of months, in fact, the stock has been seeing some positive traction. Of course, still a marked underperformer as far as the larger IT space goes, but the largest ever deal win for Wipro, $1.5 billion spread over a period of 10 years. Amit Chandra, IT analyst at HDFC Securities, joins in. Amit, what's your reading of this deal? Of course, it adds incrementally to their revenue by about 2% per year. How do you see this deal? And of course, on the back of this, is there any chance of a guidance revision as far as overall dollar revenue growth outlook goes?
Yeah, so as far as the deal is concerned, so the deal win is very positive for Wipro. But what we have to see here is that this deal has already been announced in the Q2 call, and what exactly is happening that they are taking over the captive center of allied solutions, which is in India. So there is a massive rebadging of employees that has to happen. So that is another aspect of the deal that has come up, and around 9,000 employees are there in India at the allied solutions captive locations. So that will come into the Wipro roles. So that is how the deal is now placed. But the encouraging part is that they have one such a large deal with a visibility of 10 years, and the incremental revenue, so as you know, is around 2% of revenue, and the margin profile would be in line with the company average. So in terms of deal wins, the visibility has started to come where Wipro was clearly lagging in front of growth as compared to the other larger peers. So clarity on that front will result in a re-rating for Wipro.
All right. It may result in a re-rating for Wipro. We'll get to the rating part of it. Do you see this kind of momentum to come in going forward from here? I mean, it's only the second billion-dollar deal win for them in the last 4 years. As far as the large deal win part of the portfolio goes, do you see more traction for Wipro ahead?
So we would have been more happy if it would have been a pure play deal win where a pure play data transformation deal win where there would not have been any rebadging of employees. But these kind of larger deals comes in this kind of picture wherein the company also has to invest upfront. So Wipro is also investing $120 million in the deal, and obviously these kind of deals are positive for the company and provides a longer term revenue visibility. So it's okay.
All right. Away from a stock point of view, the company itself hasn't really been up to the mark as far as comparison versus its larger peers goes. Do you see that turnaround happening in some of the segments? I mean, BFSI has started to pick up. You see a recovery in HPS coming in. What about some other verticals as well? When do you see that turnaround happening for Wipro?
So if you see the Wipro portfolio, so around 60% of the portfolio for Wipro has been really doing well. So it includes BFSI, consumer, ex-retail, and healthcare, ex-HPS, and the energy. And this portfolio has been really doing well, and specifically in BFSI, they have been growing higher than the peers. Okay. So the portfolio for Wipro, which was under stress, was HPS, which is a very small part of the revenue, 2% of the revenue, and the utilities part and the retail part. So these are around 20% of revenue, and the client-specific issues that Wipro was seeing was in communication and manufacturing vertical, which is around 20%. So these client-specific issues we think that are over, and the next quarter would see a bottoming out of these client-specific issues, and the growth guidance for 3Q would be somewhere in the range of 2 to 3%, which includes the full contribution of this large deal wins in 3Q, as in the second quarter, the contributions from this deal wins will be only for 1 month. So obviously the guidance is the most important part, what we have to watch out for, and we expect it to be healthy, at least in line with the industry growth.
In that case, like you said, for the guidance front, so are you factoring in an earnings catch-up in the second half of this financial year, and therefore also a catch-up in the stock? I mean, it's already rallied about 15% in the last month to 6 weeks, but a valuation catch-up as well?
So if you see the rally that has happened across the board in the IT sector, So as compared to that, Wipro has been an underperformer, right? So just 10 to 15% rally is not we are seeing in Wipro, but if the growth really catches up and they are able to expand margins, so we have to see where the margin expansion will come from. So that is the area where Wipro has been really struggling. Okay, so if we get clarity on margin expansion, obviously the rupee depreciation is a factor wherein they can squeeze in 1 to 2% higher margins. But margins and guidance. So if you factor in revenue growth from the second half also, then also for FY19 the growth will be in the range of 4 to 5% only. So when we see growth returning to 8 to 9% in FY20, then that is the time when real re-rating of Wipro will happen. That is our view.
So in that case, are you going to stick with your neutral view and a target of 270, or at least look at an upward revision of target?
No. Obviously, we will have a look at that, and obviously, upward revision will be there. But once we see strength in the areas where Wipro was lacking, so the portfolios where, as I mentioned, where it was lacking. So if some kind of traction is happening there, then we will see for an upgrade.
Point taken, Amit. Thanks so much for joining in this morning and running us through your reading of Wipro. That definitely is the stock of the day. 5% rally coming in on the back of that big deal win, the highest ever in the history of the IT giant. But away from that, and the focus is on